After several rocky months for financial markets, March gave us some extensive gains, giving investors hope for the spring. Let's talk about what happened in the economy last month. After months of strength, the US dollar weakened against other currencies. A strong dollar makes domestic goods more expensive to foreign buyers, which has hurt corporate profits. However, a comparatively weaker dollar will help make US products more competitive on the global market, which will usually be reflected in international demand for our goods. Last month was also important for central bank policies. The European Central Bank, Bank of Japan, and Federal Reserve all held meetings to determine monetary policy for their respective countries. Now, in recent years, there's been a divide between the Fed, which is moving away from ultra-low rates, and European and Japanese central banks, which are fighting slow economies with negative rates and quantitative easing. However, discussions at the March Fed meeting show that U.S. economists are also becoming more concerned about growth. So during the March meeting, the Fed voted to hold rates steady and indicated that officials are planning for a slower pace of rate hikes this year. Now, remarks after the meeting show that Fed economists are divided. Some officials want to start raising rates soon, while others favor a wait-and-see approach. However, Fed Chair Janet Yellen has been clear about her intention to remain cautious in the face of global risks. We also got some good economic news last month. The final estimate of fourth quarter economic growth showed that gross domestic product grew at an annual rate of 1.4% instead of 1%. Much of the improvement came from stronger than expected earnings and consumer spending, which is great news for the economy. The labor market also continued to add jobs in March, which supports further spending. On the other hand, the increased spending at the end of 2015 may have come at the expense of growth in the first quarter of 2016. Consumer spending data from January was revised lower, causing Q1 GDP forecast to plummet. Looking ahead, we'll be awaiting reports from the first quarter that ended in March to see whether the numbers support or weaken concerns about growth this year. Now, we also know that the Fed will be watching ahead of its April meeting to see whether the economy can support additional rate increases. Now, currently, most economists predict a June 2016 interest rate hike, and while we don't anticipate a rate hike until June, there's always room for a surprise if the data looks good. That's it for the March economic update. Please remember that nothing we talk about here is a recommendation. And as always, if you have questions or concerns about what we've discussed, or if you'd like to discuss your personal financial situation with us, please give us a call at 480-422-8522, and we'd be happy to talk to you.